Good morning, trading world. It is February 17th, 2023, 7:29 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook is When the Thrill is Gone, or should I say momentum. When the momentum is gone. I know a lot of y'all may not remember the famous blues singer B.B. King. He had a song called When the Thrill is Gone. So my ode to B.B. King and the thrill is gone is when the market is gone, when the momentum is gone. I wish I had my voice back so I could sing. But my parody is when the momentum is gone away, you know you stayed long too long. When the momentum is gone, you buy the dip one too many times. I'm free now, baby. Free from your hedging spells. When the momentum is gone, I'm free to short what I want. Sorry, I got carried away in my little blues rendition. Like I said, I wish I had my voice so I could sing. But how'd y'all like my little rendition of When the Thrill is Gone? All right, let's get down to business. Even though the momentum is gone, don't get carried away and throw your whole account short. The momentum may be gone, but the larger time frame charts have not completely turned yet. So I'm still looking for that blow off top where we skyrocket up and VIX rises with the rally. Not sure if it will happen today, next week, or week after. Until then, I am still being very frugal with my risk. Using defined risk strategies like spreads that I can fit a lot of time or far expirations into for cheap. My mindset is that if we're close to rolling over into a continuation trend down, excuse me, if I feel like it's, a week or two away, then I want to give myself at least 3 to 4 weeks in time on a position. Also, to exit, excuse me. Also, I've been shorting options on futures, and it is done well because it gives me the advantage to exit prior to the open. Because data drops like import-export prices that happens at 8:30 a.m. this morning, industrial product price, which also happens at 8:30 a.m., e-commerce retail sales, which happens at 10 a.m., and leading indicators, which also happens at 10 a.m., they usually don't move the market, but in this fragile state, they can. So using those options, put options on futures, helps well because I don't want to hold a futures position overnight. Definitely don't want to do that. But using the options on futures helps, so when we get that spike down off of the news event, pricing may not be as good, but it still gives me that option to exit prior to the open. Excuse me. So I guess with that being said, actually, let me go back on the chart because a lot of us forget to do this. One of the biggest things or most important parts that I do is every morning trying to find out where we are intraday and trying to fit that intraday look into where we are on a larger time frame. And a lot of us get to a point where I know I've defined it as the market being irrational usually when we have these gaps or the indicators not working on the intraday time periods that you're watching. But what we usually forget to do is trace that back up to where it is working on a higher time frame. And looking right here at the daily, we're pretty much ready to turn over. But if we take it back up to the weekly, there's still some room to grow on the weekly, which may just have us chopping sideways and getting those spikes spiked down until we're ready to go ahead and turn it over on the MACD. But even chopping sideways will still allow this to come up and cycle up to overbought on the RSI. So intraday is very dangerous right now because of where we are on the weekly, daily, and monthly. Because when we're in that shift of momentum on those higher time frames, intraday charts can go really, really bonkers. So you have to be very, very careful. And that's why I say most of the time I'm only trying to trade at extremes, and then I back out to the higher time frames to find my extremes. So with that being said, let's get into the key levels of the day. All right, here we are with the key levels to watch for. Starting on the resistance side, we have our jack resistance at 406 to the 407 area. Our queen resistance is going to be 408 to the 409 area, and there is going to be a lot of resistance right here to break through. But once we break through this 406, 407 area, we should get going pretty good up somewhere toward this 408, 409, and somewhere near 410. And our king resistance area is 410 to the 416 area. It is a huge range because we could cover a lot of ground today. There is still a lot of gamma left in the tape. On the support side, we have our jack support at 405 to the 404 area, queen support 403 to the 402 area, and then king support 401 to the 397 area. The main thesis for today is bullish, closing above the 408.28 with a projected target high of between 408 and 416. The alternate thesis is bearish, closing below 408.28 with a projected target low of between 407 and 395. The main channel we're in is 397 all the way up to 416. The main channel above that is 416 to 425. Yesterday, market strength and breadth gapped down, but quickly turned and trended up before crashing, starting around that 2:30 p.m. area. I expect some drift down before consolidating and becoming range bound on the day. But even that range bound and strength and breadth is enough to run price action up a good ways before we find the top of the range. We do have harmony between the technical side, which is bullish, and the quant side, which is also bullish. That brings us to the scenarios of the day. All right, here we are with the first scenario and most probable scenario of the day. It is our expanded range day structure. We could have a small push lower and begin to consolidate around the Jack or Queen support area and push up from there for a good part of the day. Excuse me. And a lot of this consolidation may take place before the open. We do have a couple reports at 8:30 that could give us a push down. But I look for at some point in time for us to consolidate and break that consolidation up and pretty much continue up from there. But this could pretty much go a couple different ways. Like I said, I'm looking for a blow-off top. Now, the blow-off top, you'll know it once you're in it, because we're going to get a move like this, but instead of any kind of consolidation, we're pretty much going to take off with maybe a small break here or there, and we're going to continue up toward the upper edge of the main channel that we're in. So that doesn't even do it justice, because we could pop and really get going and get up toward that 418, 420 area by the end of the day. So those are the things to kind of prepare for on our expanded range day structure. All right, our next scenario is going to be our trend day down. We can open gap down and start with a push back toward the previous close, represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area. And on a day like today, we could start the second half of the day looking to continue the primary trend, and it could possibly turn into a head fake and reversal, and we get a decent rally into the close. So that is our trend day down day type structure. Our last scenario is our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area, find our midday chop, more than likely around the Queen resistance area or just before it. And once we get into that midday chop, coming out of it, we could pretty much go down with the same amount of force or energy that we went up with the first part of the day. So that is our rounded reversal day type structure. You have to be very careful because when we get to these points where the momentum is gone, I told you things could be very sudden with the way market makers hedge. And it's quite possible to see something like a sharp move up, but end up getting a midday drop as well, where we try to come back from, but doesn't quite work out that way. So you want to be very, very careful right now and be on guard, as there are a lot of changes going on under the surface in the market right now, and things could happen with a suddenness that you're not used to. So, as always, your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.